Morning, Steve Free in Chicago with the morning grain comments. Well, Friday we went home after the USDA report and saw a little bit of support in the corn market and some resistance in the soybean market. We also went home with a forecast that the European and American model both suggested that later this week there should be some rains for the Midwest. The commitments to traders showed that the funds had liquidated 60,000 of their short corn position, but added to their bean, meal, and oil short, and for wheat, kept their big wheat short position. Over the weekend, the maps were kind of off and on, but basically this morning, the maps show that some sour activity was going to start Wednesday in the northern plains and drift over the Midwest, and then the best rains from the Midwest will be over the weekend. Again, these rains favor, let's say, Iowa east. Right now, the best rains for the weekend looks to be in the northern part, like Wisconsin, northern Illinois, northern Indiana, and Michigan. But the Ohio Valley should get some rains too. The ones that could be shortchanged in this could be parts of Nebraska, eastern South Dakota. As far as the second week is concerned, it looks cool with temperatures closer to normal. Not a lot of rain for that second week. And what's interesting is that on the 15-day map, which is not very reliable at this time, it shows a ridge building in the Midwest. So on one hand, the market is down about 6 cents across the board, taking out some weather premium because of this rainfall that's going to be moving across the Midwest later this week and into the weekend. But on the other hand, we have to be cognizant that if the weather was to change, it could affect crops. Most people look for the USDA tonight to lower the corn and spring wheat ratings as much as 4 to 6% from last week. And the first initial soybean rating should be around 64 to 67% good to excellent. So that's pretty much close to normal. After the dust settled, most people will agree with the USDA's 16 and 17 corn carry out around $22.95. Some people are a little bit lower in beans, still thinking if the exports could be a little bit higher, suggesting that 450 might be just a little high. And everyone agrees with the wheat carryout from last year at 1161. As far as 17 and 18 is concerned, most people will agree with their 2110 corn number and are higher than their 495 bean number simply because of all the supply in South America, more farmer acres here, and maybe a drop in our export demand due to South America. And everyone pretty much agrees with the USDA 17 and 18 U.S. wheat carryout at 924. So the corn market is probably going to establish some kind of trading range until we know more about the yield and supply here in the United States. Beans probably should drift lower because of just too much supply in the world. And the wheat market, I think, is still kind of in also a trading range with a little bit lower U.S. crop offering some support, but big world crop supplies offering resistance. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.